Good day, everyone. Thanks for joining us here in the chart. You tuned into the Crypto Flight Edition. Fellow compadre speaking. Quick request, Numeraire. I'm sure I didn't say that right. So correct me down in the comment section. Just a quick video showing a consolidation range, showing the breakout. If it's official or not, that is speculative at this point. And I'm also going to go over 3 levels with you all. It's just a video kind of pointing out levels to have the investors make conscious decision in this market if you are invested or thinking of investing. So stick around to the end. Loyal family, welcome back. If you're new here, consider joining the family here, and hopefully you're doing well. So let's not waste time, guys. Let's dive right into the charts here, shall we? All right, so today's April the 21st, 2021, and the current price of NMRUSD is going to be $75.59. It's down approximately 3.5% for the day. Okay. Welcome back, everyone. ASMR, interesting analysis. So super simple chart. I'll just pull up the lines here, and you guys are going to see the levels. That's it. Okay. Ladies and gentlemen, you guys are looking at the history of NMR, where it came out back here in August the 16th, 2020. It found a consolidation range, kind of like a cup-pitcher formation, consolidated as it shows there on the screen for 231 days of consolidating. And it broke out on April the 4th, 2021. Had a really nice move to the upside. I think I measured it was like 55%-ish, okay, approximately. And these are the 3-day candles that you're looking at. So here's what I'm going to do. The way that I measure my cup-pitcher formations, which I'm not sure if I do this right, guys, so just correct me down in the comment section. This is super simple. I measure the neckline. The neckline is just basically the level that the price is trying to break above. Like when it came out back in, what did I say, like August 2020, you see how it kind of found resistance at the $52 level, and it kind of got rejected, really nasty rejection. It came back up, and you see the wicks where it kind of continues to fight with that $52 level, and then it finally broke, kind of blasted out right here. So this consolidation range is, again, measured 230 days, and the way that I measure the target is I measure the resistance line. We call it the neckline, and then I measure it at the lowest point of the cup-pitcher, the dome, the inverted dome formation, and I just take a simple trend line. And I just start at the neckline, and then I go all the way down to the lowest point, even as low as the wick in that inverted dome formation, and I just kind of measure the breakout. So if you can see that, that's actually how I got this $86 target. Believe it or not, we actually tried to post a video before it reached the $86 level, and it reached that level, but that's irrelevant information. Let's continue. All right, so the $86 level is as high as we can measure it. I also noticed that it wicked as high as $90. But let me just kind of explain how I would enter this market. Again, this is just a simple request. Thank you for the request. And hopefully this will be useful to you all who are invested or thinking of investing in this cryptocurrency. Okay. So we're up against a close on this 3-day candle. The $69 level is important for me in terms of how I understand just candles, the bodies, the candlesticks. If the market can stay above $69, it's likely it will retest at least the $90 level or even obliterate that level. I'm sure there's extreme fundamentals associated with this cryptocurrency. Guys, let me know what you think this price will reach over the next 6 months up to a year. Please keep in mind, I'm just going over the technicals, and we are under the assumption that you've done your fundamental research before you made it here, and we're glad you made it here with us. So let's continue with the technicals. $90 is my conservative price target on this cryptocurrency. If we're looking to see this breakout, we'd have to give this up to 3 weeks to make a move. Remember, the cryptos, they move pretty fast, so if it takes like 72 hours, that's fine, guys. But we do see the market continuing to go up. So from the current level up to like $91 is about 20% to the upside. But again, you have to understand your risk tolerance there. I guess we can do like a really quick risk to reward ratio. If you were actually going to enter here, and this is what I would do, okay? Keep in mind, this is what I would do. And then we say that it will go up to like $90. So the risk to reward ratio is like 2.16, okay? If you kind of risk it down to the $69 level and you play it up to the $90 level. But of course, the long-term investors, that information isn't for you, okay? Don't take that information. My swing players, if you're in and out of this market, that's what I would do, okay? Now, let's just say in the worst case scenario, because if you're not subscribed, we'd love for you to subscribe with us. We've covered BTC quite often, and we're looking at BTC as close as we possibly can. And it appears that it's under some pressure, but let's continue on the details here. But let's just say that there is a severe retracement in the market. The lower level that you see down here at about $52, I don't think this is going to happen, but remember, don't enter based on what I think. If the market experiences a severe retracement, the only level that we would take a look at if it breaks below $69 is, of course, will be $52. But again, let's just kind of stay on track. The current range is going to be 69 up to 86. Okay, so that's pretty much all I have. Okay, so hopefully this was useful. And again, that my long-term investors, hopefully you can kind of understand if the market kind of gets a small push down. Let's see if we can look at the daily candles. Okay, so you see that little clustered area there, that this appears that the sellers are actively in the market participating with an anticipation of pushing the price to the downside. I could just simply look at the candles and let you know that. And again, that's not guaranteed they're going to make it down to 69, but that's where I would be interested in entering the market, 69. So yeah, that looks interesting, this kind of clustered area here on the daily candles. Let's take a look at the weekly, see how that's looking. Okay. So a lot of volatility. If you notice, like the wicks above the candle, that just represents buying interest, and vice versa. The lower wicks, or lower shadows as some call them, that also represents buying interest. Hopefully I said selling interest overhead. The selling interest is overhead, pushing the price down. And of course, the lower shadows represent buying interest continuing to push the price to the upside. Just a little small explanation that I go over for my technical guys, or for those of you who don't understand price action, or candlesticks rather, just a simple explanation of what you are looking at on the screen. And I think that's going to wrap up everything for now. I'm going to need a little bit more price activity to determine any like solid direction. Again, if it stays above 69, I think it'll go higher. So that's it, guys. Hopefully you enjoyed that. Hopefully this was useful. Leave an appropriate thumb just below the video. And again, thank you for the request. Thank you for your patience. Also, if you're new, before you go, we'd like to send you additional information on the traditional stocks if you're into that. So subscribe, hit the bell, and we'll send you that information when that is available. So that's it. Take care of yourselves. We're going to talk very soon. Be sure to execute your strategies out there. And bye for now.